Hey guys, what's up? Welcome to daytradetowin.com. Today we're going to continue where we left off last time. We're going to continue with the volume analysis and combine it with trends and trend lines, supply and demand. Volume speaks volumes about the market. Sorry for the silly play with words, but that's just the way it is. It speaks volumes about the relationship between supply and demand and about the quality and strength of trends and movements in the market. We can use this information to our advantage and gain an edge over other traders who don't know how to read volume. And in the last episode, we had a look at how we want the volume to increase and be high in the up moves of an uptrend and diminish and be lower in the pullbacks. The up legs are strong, the pullbacks are weaker. That tells us that the uptrend is strong and healthy. Trends that don't have enough volume will not last for long because that means that there's not enough supply or demand to keep trending. Instead, it's likely that we will get a period of consolidation and sideways movement or a new trend in the opposite direction. When we draw trend lines and trend channels, we can use the volume to get a better understanding about how strong that trend line is. If the market reverses at the trend line and the volume picks up on the move away from the trend line, then we can have confidence in that trend line. And once the trend line breaks, we want that to happen on a big candle with big volume. The market should show determination. And after the break of the trend line, we want the volume to diminish on the test of the trend line. The market is going to test that previous support or resistance levels, and the market is going to test if it's able to move back inside the trend channel or back above or below the trend line. So this pullback or this rally back towards the trend line after the breakout should happen on lower volume. Again, this tells us that there's no willingness to move back where it came from. There's not enough supply or demand required to do so. So let's now have a look at another way to analyze volume. How can we tell if a trend is going to end? We're never going to reach 100% certainty that a trend will end at some specific price. If we would have that ability, we would all sit on our own private islands in the Caribbean right now. But we do have a method to analyze the charts that will give us high confidence in knowing that a trend is at its end, at least for the time being. So let's consider an uptrend. The same will be true with downtrends, of course, but let's start with the uptrend as it's easier to grasp what I'm about to explain. So we know we want the up legs to be stronger and the down legs to be weaker in an uptrend, right? But how do we know that the up leg is going to end or if the uptrend is going to end? Let me give you an analogy. I'll just love analogies. The sillier, the better. Silly is simple. Simple is easy. So we have Mr. Market here running up the side of the mountain. The hill sometimes becomes steeper and steeper, and sometimes there's an area that's just flat or a part that is easier, even going downhill before going up again. So the side of the mountain is just like an uptrend. In the market, you'll have up legs, you'll have down legs, and periods of consolidation. Now, if you have ever walked up the side of a big mountain, you'll know just how exhausting it is. You'll need to be in pretty good shape to do it. I was visiting the Swiss Alps some years ago. At that time I was in pretty good shape. I was jogging regularly. I was going to the gym, but I was still getting pretty darn exhausted as we went hiking in the mountains, the Alps. So as Mr. Market starts walking up the mountainside, the path gets steeper and steeper and steeper until finally he reaches the mountain ridge. The volume bars shows the effort he is making. The volume bars get bigger and bigger. Mr. Market is getting more and more exhausted. Right at the top, he makes the final push, one last big effort to get up to that ridge. That's exactly what happens in your charts as well. The bars move higher and higher, and the volume stays high or picks up and increases. At some point, there will be one last push, one big candle on very, very high volume. This is sometimes referred to as a buying climax. Now, this buying climax exhausts the market completely because it happens on a big candle or a few big candles and with very high volume. What happens during the buying climax is that all traders notice that the market is moving up. Everybody who watches the chart will notice the big move that the market is making. It's moving up fast and they all want a piece of the action. They don't want to miss out on a big move that the market is making, so everyone's rushing in and buying. And the market makers, they're able to raise the price. There's a lot of demand, so the candle is getting bigger and bigger, and this causes even more traders to join in on the buying. So it's kind of a self-fulfilling prophecy. This means that the volume is getting bigger and bigger as well, because more and more traders are buying. The more buyers and sellers that participate at any given time, the more contracts or share that change hands, the bigger the volume will get. Then when all the traders who wanted in, when they have bought everything that they wanted to buy, then there's no more demand left. Nobody wants to buy anymore. And what happens when there's no more demand? Well, the prices will stall and consolidate. Or if there's supply coming in, sellers entering the market, the prices will fall. There will be a pullback or a sideways consolidation. The buyers who bought close to the top, they will sell because they aren't seeing any profits on their positions. It doesn't make sense holding on to a trade that does not produce profits. And the traders who bought at lower prices will sell to secure their profits. And of course, the traders who bought right at the top will start to have losing positions and their stops are starting to get hit. So all of this is building upon what we have learned in a previous episode. When demand overcomes supply, the prices will rise. And when supply overcomes demand, the prices will fall. We'll continue on this topic in the next episode, so please make sure you subscribe. And if you have any questions, feel free to use the comments here below. Until next time, take care. Bye bye.